It's much better to be passive. Even in Acergy, the involvement we had, I would say really didn't move the meter. And instead of trying to be leading someone along to where they should be, it's better, of course, if they're already predisposed and think in the right frame of mind. So that's a preferable process. In Acergy, as I would say, in a lot of situations where we've been activists, I would somehow call us passive activists. So we're not identifying a company that we think trades at a significant discount and then becoming the activist to push the company to realize that value. Instead, if we're investors in the company and the company either doesn't take certain actions that we think make sense or does take actions that we think don't make sense for shareholders, to be more vocal on that we think kind of makes sense. And I think that's an important thing, that there really is separation of capital from the board and from management, and having more conversation in that process to communicate. More communication is a better thing. Structurally, there's a lot of reasons why it's difficult to do that, and the status quo tends to not foster communication, which is an unfortunate thing. Because I frequently, some of the companies that we're involved with, I do think trade for substantial discounts to what intrinsic value is, and I always will talk occasionally to managements and boards in the concept of, you and I are on really the same side of the fence, and there's an interloper out there who can come along and see our company and identify that it's worth twice where it's trading at, and there's an opportunity for him to insert himself into that situation and to be an activist for change that may lead to a transaction that may be a 35% premium to the current market price. Clearly, that's a profitable thing for that interloper to do, but you, the management, and me, the shareholder who's got a long-term view, we're the ones who potentially are disadvantaged, because I think it's worth 3 times where it's trading at today, and over the next 3 to 4 years, if I can realize 3 times the value, my annualized rate of return is going to be better than a 30% bump in the short period of time. And you, the management, in that new configuration, whatever that might be, you may be better off, but there's a good chance you're not better off. So we've got an area of commonality that somehow we should work together to protect that. And so therefore, we both realize the value intrinsic in the company today. And to do things to accelerate that process and to be cognizant of that and to maximize the value is important for us to do.